Whenever you're analyzing the market and start looking for opportunity to enter a trade, one of the first things you are meant to do is to identify the market structure. That's the first thing you are meant to do whenever you're analyzing the market. But in your attempt to identify the market structure, the thing you need to do is to be able to know whether the market is actually trending up or is in a range or the market is trending down. But bearing that in mind, let's take for instance, you have identified that the market is going up, which is uptrend, or the market is in a downtrend. So the next thing is how do you actually enter your trade, which everyone advises you to look forward to join the trend, which means you are going to be trading in the direction of the trend. So having known that you are going to be trading in the direction of the trend, you also look at the chart, you discover that by the time you are looking at the chart, the market does not move in a straight line. The market goes up, it comes down, it goes up, it comes down. So do you just jump in because you see that the market is moving up? No, you are not meant to jump in when you discover that okay, the market is an uptrend. What you are meant to do is to join at the pullback. So in today's video, I'm going to be showing you how to time the end of a pullback. Because if you take a look at this chart, you should be able to know that after the market takes off from this level and reaches here, you discover the market pulls back to this level, then takes off the next move, pull back to this level before it takes off the next move. The question is, how do I know that this pullback that is coming here will actually be the end of it, so that I can be able to buy at this point and join the trend while the market is moving up? Because the theory is saying that you should join the direction of the market, which means you should not be shorting the market here. So how do I join? How do I buy at the bottom here or within this region where the market is about to take off? So that is what this video is all about. I'm going to show you a techniques or two which you're going to be using to be able to identify when the market is ready to turn around, or the turning point from a pullback, the end of a pullback. So that's what we're going to be identifying in this trade. So make sure you watch this video to the end so that you'll be able to identify or follow up each step I'm going to be showing you. So guys, remember to like this video and also click the subscribe button. If you take a look at here, you see that we have a tool called Fibonacci. If you have not heard of it or you don't know how to use it, there is the right way to do it. Even if you have heard of it or have been using it, it doesn't work for you. So make sure you watch this video because I'm going to explain to you how you are going the right way to use it. Use it the proper way so that you'll be able to time your entry in the market. Alright, by the time I take a look at my chart, I should be able to come here. I already place it here in this my favorites where I'm at. By the time I click on this, I should be able to pull what? Fibonacci. When you look at this chart, let's say as you can see here, market was consolidating in this region. Alright, by the time market pull back to this level, then it takes off. When you want to draw your Fibonacci, you don't come down to here to draw it up the way up here. No, you start from where the impulsive move starts. You understand? By the time you take a look at here, in an uptrend, we have what they call impulsive move retracement. Impulsive move retracement. Alright. So by the time you take a look at it, you discover that this impulsive move starts from here. Alright, not here. This market, as you can see, when market takes up to this level, it pulls back here. Alright. But since you want to capture where this region, like to time this area, what you need to do is to pick up your this trend line. I already click on this, so once I pick it, I'll come here. You click and hold your mouse, then drag it up, right? Then leave it at the peak. So you can see this dot line here. You see the first point here start from here, and this line, this straight line here, and at the peak where the market starts reversing. Once you're able to draw this thing perfect, you should be able to take a look at these numbers, right? You should be able to take a look at this number. Let me set it very well. Okay, to be able to take a look at these numbers, what are you looking for? You are waiting. If this market keep pulling back, you understand? You are waiting for market to reach, you see 0.5, which means 50% retracement. All right, this is a kind of telling you 50%. You are looking for what? 50%. There are a couple of calculations that you need to know what this number is all about. But this particular tool that I just showed you, which is Fibonacci retracement. So you can see Fibonacci retracement helps you to do those calculations. So you don't need to bother about the calculation or how these numbers is generated. All right. So all you need to do is to do what? By the time you put this number from the start of that move to the end of it, where the market started retracing, by the time you pull it like this, you started looking for what? You are looking for this zone, which is 0.5, right? 0.5 and 0.618. Once market reach there, if the market retracement is deep, then you'll be expecting it to reach around 0.6 by 618, right? Here, or it's going to be what? Around 0.5. Like in this instance, by the time market reach here, as you can see, 0.5 within this region, you see engulfing candle. When you see, because market just reach here does not mean you should enter, notwithstanding some people use pending order. But once market reach this region, because the fact that here is also a support level, alright, then they put a pending order, enter. But to be conservative in your approach, you should wait for what? Any or whether pinned by any of the price action to give you a bullish price action to give you a sign for you to enter. Alright. As in this case, as you can see, we spotted what? We spotted, let me zoom it so that you'll be able to see it very well. So in this region, as you can see, we spotted what? Bullish engulfing candle here. Then to buy. Once you buy, you should be able to hold your trade all the way up. So that you'll be able to make the profit. I don't know if you understand this. I'm going to show you another example so that you understand what I mean by this indicator or this tool as a way of identifying where the market, the turning point of every pullback. If not everyone, because no one is perfect. So, but majority of the pullback, you should be able to use this tool to be able to identify it. Remember, we captured this one from here to this level. Then the next one I want to show you, let's just see what we can do from here to see where this pullback lands on. By the time you come here again, you'll be able to capture this thing. Remember, I will not start from here because after this move reach here, it pulls back again. Alright, so I'm going to start from this region here, right? I mark it all the way up to this place, alright? Try and set it very well. So as you can see here, when the market takes off from here, remember, is this horizontal line that I'm using to calculate it, not this normal one, alright? By the time you pick this, drop the point here, then drag this horizontal line, let it touch this peak at the peak of this particular or impulsive move, alright? By the time you'll be able to do this, you'll be able to look at this. Remember, what are we looking for? We are looking for either it's at this 0.5 or 0.618, which is what? 50% retracement, right? As you can see here, when market reaches, started retracing. So do you just jump in? No, you keep waiting. As you can see, when market reach around 50% of retracement, when market is in a strong trend, it tends to pull back a little bit. But if it's a medium trend or weak trend, you understand, you should be able to know that the retracement should be deeper, whereby you'll be seeing it around what? Around 0.6. But anywhere around this region, that's why it's always advisable for you to wait for a candlestick, pattern, so that you'll be able to know, because you can just enter here, the next thing the market pull back to 60%, 0.61 or rather, then it will kick you out before you start go. But if you wait for price action to show you, to tell you that okay, the markets have actually come to the end of this pullback, then you'll be able to enter. For instance, if you take a look at this one, by the time you see this candle bullish pattern showing you that okay, if you're able to jump in, or even if the markets come here, because if you enter here, your stop loss will be below here, the markets come back again to retrace, it still give you another rejection here, showing you a go fake candle before the market takes off. If you're able to apply this particular tool that I show you, discover that you will be able to time your what? The end of a pullback before that you'll be able to join trend, right? So this is the tool you are going to be using. You can even go apply it on maybe when market is in a downtrend, right? The market is in a downtrend. It takes, for instance, let me remove this so that I'll be able to show you. So whenever you're analyzing, let's say the market is moving in a downtrend, you can be able to use the same tool as well to be able to identify the market. If you identify the market, let's say for instance in this case you see that the market is heading down, all right, the market is heading down, the market is in a downtrend. What do? You can be able to come here, you pick this chart, all right, let's say it starts from here, this move, then come down to right. By the time I place it, as you can see, the previous one we did, remember we started from this peak, then we draw it to this level, which is here. You see the horizontal line is here, all right. By the time you take a look at it, discover that this one we have what? We have 0.6, the retracement to actually reach it. That's why what I showed you in the previous example, that when market is trending strong, it tends to stop at what? 0.5. But in this case, it's actually reached here. But as you can see, the military market reach here, it show you what? A bearish pattern, which will tell that you should short here. As you can see, the market starts heading down, right? So these are the tools you can be able to use. If I'm able to delete this and still scroll down more, you will see that I can still apply this same thing here. By the time I take this, I'll be able to come here, pick up the chart, the tool again, then let's say I take it from here. Okay, let's start from here, drag it all the way down to this region. As you can see, the market come down from this level to this point, then start pulling back, which means, when market is heading down like this, you're not meant to jump into the trade. You are meant to wait for market to pull back when you want to start the next move before you join. But the question is, how do you time the pullback? So for you to time the pullback, let's say for instance we are looking at this chart, the market is heading down, all of a sudden you see it start pulling back. You don't know whether the pullback is within here, whichever way. So for you to be able to identify the end of this pullback, all you need to do is to pull this tool called Fibonacci retracement. Then place it here, from here down to this place. Then wait at this region. By the time you see the price reach 0.5 or within the level of 0.618, should be able to start looking for a bearish pattern. For this case, as you can see, when market reach this level, the next thing you see this candle form here, whereby an engulfing candle, this particular bearish candle engulf this one, which is a sign of sell. The next thing you will short the market and put your stop loss above this level. As you can see, the market's head down, which will make you to make profit. Make sure you apply this whenever you're analyzing, and you will see that your level of profitability will drastically. And check the Telegram channel.